Hi, this is Randy Finney with the Right Side of the Chart, and today is Wednesday, November 29th, 2017. I wanted to do a video on the cannabis stocks. The sector's been moving recently, and I had a request from one of the members of the site for a video update. I do video updates. There's just too many stocks to cover in the sector. There is an ETF, and that's what we'll start with here. There's actually a couple. This one, which trades on the the Toronto Stock Exchange, and we also have HMLSF, same ETF, just trading on the US. I pointed out in the trading room yesterday, early in the day, there was a potential. You can see the wick here, or the tail on this candle. Um, and we had the potential for a bearish engulfing candlestick. It was early on, so I just said potential, and it never did finalize. In other words, you have to have the body of this candle, that low part of the body, engulf the body of the previous candle. Either way, it's a pretty big red candle, something to take note. You can see here I put a line here. We basically backfilled the gap from the previous trading session. So we backfilled Monday's gap right there and managed to close the day. We were still down. You can see negative divergence now for the first time in a while here on the RSI. We don't have divergence on the PPO, but we're pretty extended. So the common theme here is I personally, when I made mention of this yesterday, I took profit on one. It was a strategic take because that stock was at resistance. Um, and so, it's best to take, it depends how you want to trade them. There's times in a lot of these stocks you can use them as both swing trading opportunities because these patterns, that's what I'm going to go over today, chart patterns, price targets, things like that. And or you can long-term trade them, invest in these stocks. And I've been saying for a long time now, my favorite approach is to take a shotgun approach, meaning I scatter money, little bits of cash in a lot of these different stocks, those with the best looking chart patterns, and somewhat loosely manage that. Like, for example, yesterday taking some profits, and a week before taking some, posting for the first time in years, or at least over a year, taking profits on all my shares ACBFF, which is one of my favorites, still is. But that one, pushed a little higher up since then, and we'll get to that one in a second. But just keep in mind the momentum is still here as of now, but we're starting to see a lot of these stocks approach resistance. I'm starting to see divergences set up, and when the momentum players exit, guys, these things can tend to come back in pretty quick. But with that being said, let's go over the charts, and I'll let you decide which ones you own, where you want to take profits, where you want to add to these, where you want to get in. Some of these haven't even taken off yet, and they're just now breaking out or close to it. So I'll go over those charts. We're going to start here, not any particular order. I have these sorted and flagged. Just happen to be sorted by the percentage change yesterday. Again, I'm doing this video before the market opens, so this is not we're not trading right now on these stocks. This one, CBIS, this is actually the one that I took profits on because I had this target right here at 0.0567, and that's where I took it. We went a little bit above that. You can see reaction, what I call momentum fueled overshoots are extremely common with these stocks. And if you haven't heard me use that term, a momentum fueled overshoot, when you have a near vertical rally like this one, you can see took out this downtrend line, had a false breakout, and then the real deal back tested. And from that back test, this thing in just 1, 2, 3, 4 trading sessions, if I can move where the bottom of that candle is, it rallied 75% in 4 days, 4 trading sessions, that is. That is what I call momentum fueled overshoot. So now my expectation, anything can happen. The market hasn't opened yet today. If it can stay above that level, well, you can see these are the additional targets, and that's why I'm doing this video. And if you need specific numbers, if I don't have them labeled, just drop me a line in the trading room, and I'll be glad to share that with you. But either way, 75% in 4 trading sessions, good enough for me at resistance. And I had my concerns that the ETF at that point was forming a potential bearish engulfing candle. So there's the chart on that. Still has a lot of room to get back to these early 2017 highs. So there's a lot of potential, and these are all potential price targets. And it's great when you see some of these stocks, and we're seeing that now breaking out to new all-time highs. I made mention early on, a year or two ago, that the market will, or actually I think I made these comments after the presidential elections. We had a big run up into the elections, and I called that as a buy the rumor, sell the news event, and that's surely what happened. That's where I was able to take a lot of profits. Some of the stocks, like this one, managed to go higher after the elections. Here's the election peak back in November. But this one happened to go higher, but has since given back a lot of those gains. And like a lot of these fell back to their pre-election, presidential election highs. Or I should say general elections, because that's where a lot of the states voted to add this, legalize it, either medically or recreationally. And so my comments back then were, and still are, the market is in the process of separating the wheat from the chaff. There's going to be a lot of these companies that longer term do develop sound business models and grow. And these stocks that are selling, many of these under a dollar now will be, at some point in the future, like ACBFF, Aurora Cannabis, will be, over a dollar share, and then we'll, eventually move on to off bulletin board and pink sheet listed, stocks and onto exchanges and start being picked up by institutions and funds. And then there's going to be some that go to the wayside because they're this. I equate this a lot to the .com uh, era back in the 90s, leading up to 2000, where anything with a name .com at the end of it, was getting bid up just because people were associating that with the internet. And a lot of the retail investors that are buying these stocks, they do not know how to read a spreadsheet. They don't do fundamentals. They don't even look into the company to see if they have a website or a sound business model. And those companies, a lot of those will go to the wayside. And so you have to be aware of that when buying these speculative names. So I like to buy those with the best looking charts. I'll certainly put a little more money in a stock that has a higher price cap, market cap, business model. If I'm holding some for longer term like I was and still plan to get back into Aurora, I look at the fundamentals, I look at the business model, I go to the company's website, I read what are they doing, what's the potential there. And I don't do that with each and every one. There's just too many. But again, if I'm going to take or at least allow a position to swell to a big size, that's the case with a lot of these that I've had where, you put in a very small amount, and by the time you've, tripled or quadrupled your investment, you're starting to get to an overweighted position in the sector. So keep that in mind. That's all portfolio management stuff 101. All right, let's fly through these and try to wrap this up. If I have to break it down into two videos, that's what I'll do. The next one up, EVIO. There's a downtrend line, sort of a wedge type pattern. You can see the targets here. So I'm not going to spend so much time listing and pointing out these targets. Again, pause this video, or my recommendation also, increase the playback speed to 1.25, 1.5. That way you can go through these quickly and pause it or slow the video down when you get to your favorite stock. So there it is. And that one, here's one that appears to be bottoming, is just broken out. So where the CBIS, that's one I was taking profits on yesterday. Not that I'm going long this one now, but if I were to go, this is one that I'd be looking to go long for a pop up to any of these levels here. But again, I think this run seems to be getting a little frothy at this point, so caution should be in order there. But again, if you want to play the momentum, as long as the momentum's in the sector, look for these that are now breaking out. POTN, there's one just broke out. Not a super well-defined downtrend line, but it's worth noting, and a big impulsive candle that helps to validate a breakout. Big volume. I know you probably can't see it down here, but this is the biggest volume on the stock, largest volume stick or bar. It's going all the way back here to back in June when the stock peaked on a buying climax. If you can make out the bars here, you see the largest mountain, if you will, or mound of volume bars right there. That's what they call a a buying climax, which marked a top in that stock. And now we have a big volume bar there on the breakout to confirm that breakout. So that one looks good up to 10. Again, you have to have wind at your sails. And if the majority of these stocks start to correct sharply in the coming days or weeks, it will certainly provide headwinds for any of these stocks that are just now breaking out. So keep that in mind. It's like a game of musical chairs. As long as the music's playing, green light to engage the sector and have fun. You won't make as much money in any sector that I can think of in such short order as you can on these stocks. Again, you can just look at the percentage gains on some of these that I'm covering here. And these are daily gains, of course. CBDS. This one looks like it broke out see, that's a beautiful downtrend line, well-defined downtrend line. Targets there. Just took out that second target. If it doesn't if it holds that level, if it pulls back or continues up today, there's your next couple targets. And ultimately, any company that really has a sound business model should ultimately see these previous highs, and that's what you want to target. And then when you see a breakout of those highs, that's certainly bullish. CNBX. And again, a lot of these will be the same company under different symbols, tickers, some trading on the Toronto exchanges or some on the US. There's a downtrend line breakout. There's some levels. So this one is just recently broke out and back tested, moving up. Again, it might not look like much, but that's so far about a 62% rally here in just the last about week or two. And there's your additional targets for that one. EAPH, Eastern Pharmaceuticals, has a pretty significant support level here. You can see that about 0.0184. That's contained all these pullbacks. It was resistance back here. So watch that level. There's one you can buy on dips back to that level, but that would also be an ideal stop. And again, you might want to use a stop on a daily closing basis. Intraday whipsaw signals on these thinly traded stocks are very common. And there's your targets if that one starts to power up. And you could probably draw a downtrend line at this point off those recent highs right there. Vape, nice run on the breakout on Vape. Here's primary downtrend line here off the highs. Several reactions, 4 or 5 reactions on that trend line to validate it, and then boom, since that one's broken out just the last couple week or so, it's up about 127%. And again, each and all of these are potential price targets. I should add one right about where it stopped yesterday, because you can see these reactions here and that previous reaction high right there. So that one certainly is at hit resistance yesterday, and these are the additional targets. How much longer it keeps going? Well, don't ever underestimate just how overbought these stocks can become or how oversold they can on a downtrend. So just because it's overbought on the RSI doesn't mean it's going to stop. But again, you kind of got to, the way I do this is try to look at the individual stocks, at least the ones that I'm holding. Look at where are they at when the sector looks like it starts to top. When the majority of these stocks start to slow down on the momentum, especially if they start breaking trend line supports and things like that, or come back in on after a big run, hit a support level where it should hold support, but then that support gives way. So again, I've just said it, as of now, the momentum is there, but that can change on a dime. So there's Vape. CGRW, you can see a lot of reactions here and back here as well at that level. I don't know why it's not showing here. There it is for you. 211, so call it 212 to be safe. That's a pretty powerful level there. So if that one takes that level out, there is a reaction high there around 235, but I see that one coming up here to about 248 right there. DEWM, like this one as well. It hasn't taken off right now. It's had a big run up earlier in the year, and that was a great time. I posted taking some profits. I own this one long term, but I took a lot of profits on that big run up because the sector didn't have the momentum behind it. Primarily, that was the primary reason. I took out those previous reaction highs, but it came back in. So this one, the story on this one, I'm watching this downtrend line. It's had quite a few punches above it, and none of those really stuck yet. However, now you can see these recent candles, we are trading. Here's a breakout that stuck, meaning a daily close above, and every candle so far has remained above there. So this one could go at any time, and I expect it will if this momentum continues for a little while here. So there's one that you're getting it after a big correction, hasn't yet gotten away from you yet, and stops. I don't want to see that one at this point go below that 0.003 level. That really, it should contain any pullbacks from here if the bullish case is intact. ATTBF, that one, you can see levels here, very nice level, well-defined resistance by about 0.1758. Took that out, and very impulsive move so far. And there was also flagging right around at that resistance level, and it broke out of that flag. It was a pennant right there. You can see if I drew the lines, it's a bullish pennant. And then boom, here's your next resistance or target up here, about 28 cents. And as always, you might want to sell a little below that level. CANN GCN, General Cannabis. Nice descending price channel right here. Broke out of the price channel, back tested, and boom, off to the races. Closed yesterday right under a target about 181, 182 after a brief momentum overshoot. And these are additional price targets. So there's one that just recently broke out. And again, it's just a matter of how long the music keeps playing before this sector takes a breather. MJN.V, V meaning the Canadian Venture Exchange. And this one broke out to new highs. That's bullish. It's always bullish to see it break out to new highs, especially when it sticks. At this point, we have divergence. Maybe this one's stretching it here. If stock goes up anymore, it'll have burned through the divergence on the PPO. There's still divergence on the RSI on this push to new highs. But you can see after this was the breakout here, and quite a bit of follow through so far, and that's what I like to see. You know, a lot of these stocks, or quite a few, I should say, breaking out to new all-time highs now. MCIG. And this one, you have a descending price channel here, recently broke out of that price channel and has been consolidating. So sort of flaggish type action, just look for a pop, impulsive break above that recent range. And you know, if you're looking for stops on these, you can look at the support levels listed below. This one's not a very solid line. Um, I would say let's move that line up to there. That should be, you can see a lot of reactions. This line's at 0.1629. Zyme, and some of these aren't pure plays. This is a biotech company, for example, ZYNE. This one recently backfilled this big gap right here, and then some by a little bit. I don't have a lot on that chart that jumps out to me, so let's move on. GRNH, there's the primary downtrend line, breakout, back test, and now we have this minor, not a lot of reactions. I don't want to force this trend line. I don't want to say it's super valid because again, I had, you know, I could have had a trend line here, and I did before, and moved it up here. Either way, lately we've been tapping up against that level, and there's also this long-term support level here. You can see this green line going all the way back, defining a lot of reactions, and it's sort of clinging to that after a little washout move below it. So if this one can get some momentum, especially if the sector keeps going, look for a break above that line, and then these are your near-term targets, and all these are longer-term targets. CGRW. Downtrend line's a little sloppy because it's had quite a few false breakouts above it. But either way, it looks like it's finally starting to rally here above the trend line. But probably the most salient level on this chart that I could highlight would be about right here. You can see if you look to the left of that, a lot of reactions about 101. Which yeah, we'll call that 101. And again, you just have to be aware that these erratic, low price, you know, thinly traded stocks are prone to these intraday whipsaw signals and false breakouts and things like that. But an impulsive move above here, and in my opinion, as long as this sector continues to have this momentum, probably the next breakout above that level will be the trigger because people are right now looking for cannabis stocks because the momentum is there at this point in time. So I think the next break above 101 will probably stick. And I think at the very least, I mean, it's a lot of potential energy in this stock here, but 122 and then 141. Those are my first two targets. THCBF, there's your levels. It's consolidating here between about 75 and 55. So break above bullish brings you up to 107. Break below bearish. Break below that 55 level. Excuse me. Cara. Cara gave us a little false breakout about a couple weeks ago. There it is. That breakout. And then the very next day we back tested, closed back on the trend line. So it looked okay at the time, and then boom, fell back below. And so it's still, you know, enough reactions that I've left that trend line there. Cara's it's a biotech company, but they have a couple drugs, cannabis-based drugs, painkillers, I believe, in the pipeline. So that's one to watch. Longer term, I still like it. If it gets back down here to 990, I think it's a great buy. If it doesn't get there, if it breaks above this level, and particularly that 1444, I see quite a bit of reactions there. So the two, again, probably the two key or salient levels for this stock that I'm watching are that 1444 and that 990. MCOA, there's downtrend line. You can see little whipsaw breakout there, false. But this one stuck. We had a breakout here yesterday. I'm sorry, that would be the Monday, and then follow through yesterday on Tuesday. Hit that first target. There's your next target after that, and so on and so forth. CNAB, United Cannabis, boom, breakout, back test. There it goes. Next target, and here's your other targets. ERBB, thinly traded, not crazy about it, but it seems to really find support here around these levels. You can see right here, all in here, a lot of support, and it's at that support range, we'll call it, those two lines there. So let's move on. Thinly traded, but if it goes, here's your levels. A lot of meat on the bone, especially with these super low price one. This one trades at a fraction of a penny. Emerald Health, EMHTF, break out to new highs, nothing but bullish. A lot of volume confirming that. I think I have um, on another symbol for this same company. I'm not sure if this one is the U.S. shares or not. I might have some Fibonacci projections, which we'll get to in a second here. But either way, that looks pretty good. XXII, 22nd Century Group. This one's biotech. Here's a trend line to watch. So you can just buy pullbacks to this trend line with a stop below. Um, it did have some divergence here. Should have been drawn at the highs, and that's where it led to that pretty steep correction. But that was a great buying up there. Wish I would have pointed that out at the site. We had the uptrend line as well as this very well-defined price support level right here, about $2. So it came back in $2, hit trend line support, price support bounced, was oversold at the time. Last time it was oversold was back here. You can see how strong that rally was. And just looking at this now, I guess what kicked that whole rally off was this, I had the divergent low marked here, but you can see there was also a downtrend line breakout back test and boom. So longer term looks good as long as it holds above that $2 level and the trend line. Trend line's not super well defined. I would put a higher weighting on that $2 level, by the way. AERO, there's a nice little trend line to watch. Here's one that's been dancing on long-term support. You can see that long-term support going all the way back. A lot of reactions back here and over the years. So as long as it holds above that level, it's been dead money for a while if you're okay with that. But if you don't own this one, might as well just wait for a breakout above that downtrend line. And again, I have to caution you, if you start to see the momentum in a lot of these stocks break, support levels break, trend lines break, then I would be very leery or skeptical about any breakouts that occur on any of these stocks that haven't yet run. CCAN, Canadian Cannabis, big divergent low you can see down here. Positive divergence. It has resistance there about 17 cents. If it can take that out, about 21.5 cents next target, and then a thin zone all the way up here at about 40 cents. So a lot of meat on the bone if it can get going. And those are the levels it needs to take out to do so. GWPH, GW Pharmaceuticals. Here's a trend line. Story on this one, I marked it yellow here, 133.55, actually a little bit higher. You can move that line up. You can see the reactions. Call it 136.76 or so. It needs to take out those highs. If and when it does, that would be bullish. Otherwise, until then, it's sort of a dead money sideways trade. MJNA, medical marijuana, downtrend line right there. There was a breakout. There's the rip. It's come back in, worked off the overbought conditions a little bit. Hasn't yet taken out that high. So these are levels to watch if you own it, both support levels and overhead resistance levels, which can serve as targets. CMED.TO, TO meaning trades on the Toronto Stock Exchange. This one, you had these downtrend lines which served as buying ops when you broke out, downtrend line, breakout, little flagging consolidation action, breakout. But this one's just too stretched for my comfort level right now. I don't own it. Don't believe I did own a position in this one either. Wish I did, obviously, looking at the chart. But I'm looking at a high level a bearish crossover on the PPO. It hasn't yet crossed, but it's poised to. Typically, you can see a bearish cross right here. You can see what happened. We had a bearish cross here, but that was during a period of consolidation, and the lines were flattening. So I don't pay much attention when the PPO lines flatten out. I like to see separation in the lines, and we definitely have separation here. So that's a bearish sign. There's an extreme overbought reading. So there's one that if you haven't taken profits yet, you may want to do so. EDXC, Index Corp, well, there's your levels, just trading sideways here. It needs to take out this line, which is about at 6 cents, and it needs to hold above this level. It's a pretty big range, but those are the levels. That's how I see them. And if you're not willing to tolerate swings of, that measure into the double digits, then you're trading the wrong securities, because these things you're looking at price targets that measure often into the triple digits, if not more. Longer term. I'm talking long-term investing. If this is a stock, you can see just, over the last couple of years, it went up about 800% off the lows, and then gave up, about half of that. CVSI, there's a downtrend line. This one just hasn't yet had a chance to giddy up and go like a lot of the others, but I need to put a line right here for you. That's the level to watch. If you're long that one, that level is about 21 and a half. That is very good support. You can see a lot of reactions here, other than that brief washout move there. And the bullish case would have it breaking above that trend line. So you could buy it here if you want, with a stop not too far below there. Just remember, these stops can be bypassed. Very tricky swing trading these. So, I like to, most of these stocks I'll use as longer term investments, trend trades, and I do micromanage those positions. That's the way I look at it. I don't just blindly tuck them away and put them away. I add to strategically and subtract as well, meaning take profits strategically. HMMJTO, I already covered that. That's the ETF. I already gave you my thoughts in the beginning of the video. THCX.V, Canadian Venture Exchange, the Hydroapothecary Corporation, trend line, breakdown, back test, red candle, negative divergence right here at the highs. So there's one. Again, if you were in that one, more power to you. And if you still are, more power to you. But at this point, you can see that breakout to new highs over that previous all-time high was a failed breakout. Not a great sign with the divergence and everything else. It tells you, hey, you may want to take some profits on this one if you haven't. And if not, you can have a stop right here, somewhat below that 251, 250-ish level, because that should act as support. That's where a lot of the recent trading has been contained. And if it can power up through there and regain that trend line and take out that previous high and burn through these divergences, well, that's bullish. EMC.V, when I look at this one, I see a big fat sideways trading range. It's been a dead money trade, but that won't last forever. So obviously bullish if it breaks above that level, around 210. Wrong tool. Trying to show you a line tool, and bearish if it breaks down below. No other way to really slice it or dice it, and you can't really extract too much from the price action as long as it's within that trading range. Weed.to, Canopy Growth, one of my favorites. Recently broke out to new highs, back tested those highs. There it is. There's your previous reaction high back here from 2016. So breakout, back test, and so far so good. A lot of volume coming into that one recently. So, okay, guys, we're almost done here. We've got about I don't know, maybe 8 or more stocks. TRTC, there it is, downtrend line. There's your levels to watch. Breakout had a little rip. Not one of my favorites, but there's some levels and targets to watch. TWMJF, again, the same company I just covered a second ago that trades under Weed.to on the Toronto Exchange. These are your U.S. shares. These are some Fibonacci projections here. I took the fib projections and marked from this low here to this high, back to this low. And you can see that would target if this one's going to go anywhere. We have these targets here. Longer term, I favor this one here. This is about 2075, and then after that, 2536. Will it get there if the sector all of a sudden reverses the trend And most of these stocks correct, probably not right away, but longer term. And again, this momentum can continue for quite a while. Anything's possible. So we want to see it take out that previous reaction high right here. And if so, again, these are my preferred targets up there, about 2075 and then 2536 or so. Emblem Corp. This just, I believe I covered this one a minute ago on the Canadian shares. These are the U.S. shares. EMMBF. That's the same one. Big trading range. And that level, top of the trading range on EMMBF is 170. That's what you need to see it take out, and you don't want to see it drop, and especially a daily close below that 113-ish level there. APHQF. Apfria looks like pretty stretched. This almost looks like the ETF that I just covered a minute ago. We had a potential for a bearish engulfing candle. Didn't do it. Closed the day up above the bottom of the previous candle's body, but it was looking pretty toppy, pretty stretched. Although it did break out to new highs recently, so you have to give it that. That's bullish as long as those new highs hold. Maybe another back test of those new highs. Maybe it keeps going. I certainly wouldn't short a stock like that, but I just wouldn't chase it here if you don't already own it. AMMJ, there's your next levels up there. Right there is about 105 or so. You can see quite a few reactions have been capped around that level there. And if it takes it out, it'll probably make a run at the previous reaction highs. ACBFF, again, it's been one of my favorites. I've, just recently, a couple weeks ago when we got up here, I think I had some fib targets up there. Fibonacci projections or price targets. Either way, that's where I for the first time since owning shares back here at 55 cents, those long-term shares took full profits. Turned out to be not the best move because the stock went up another 33%. Oh well, can't win them all. Either way, I see negative divergence here. If I draw it here, you can see prices making a higher high. Divergence on the RSI, just as we had divergence back here, just as I posted back the day this thing hit that my official trade was at like $3 a price target. I sold in the in the 290s. Pennies from that high before that correction, and then multi-year or at least year-long plus sideways grind. That's where I took profits on a lot of my position at the time. That initial position held the rest through here and then sold there. And now I think this one wants to come back. I'd like to buy back into the stock, but I'd like to buy it back ideally if it can come back to 295, that'd be great. Maybe another pullback here to 392. I'm just stepping aside for now, waiting for the dust to settle in this most recent run before I decide to re-enter this one. SPRWF, Supreme Pharmaceuticals, breakout to new highs above that 144 level. So you want to see 144 hold, especially on a closing basis. May want to come in a little below that. There's some support down here around 133. So I don't think it's end of the world if it gives back that 144 level, as long as it remains above 133 on a closing basis. And three more. OGRMF, Organigram Holdings. That one challenging. I think it'll eventually break out of the break out to new highs. That previous high is about 328. But there's a downtrend to watch, and we do have negative divergence now. So I don't know if that breakout's going to happen soon. The only way it's going to happen, I think, is if the sector continues to have this momentum that it's had lately, and if that continues for a while. Otherwise, watch this price channel. There it is. If you own this stock, if it breaks the bottom of that price channel, you may want to watch out because it's probably going to come back down here to at least at 223 level. And bigger picture, if you can really just step back and look at the long term on this one, is this big, consolidation pattern. This stock was back here, and I don't know if I was recovering it back then, back around 45 cents. Now it's at around close to $3. This is a pretty big basing range or trading range, and ultimately a break above that would be quite bullish. So watch that one longer term. And that's just the Canadian Shares Venture Exchange, same company. ENRT, there it is, last stock to cover, downtrend line breakout. Most importantly is this 5.25, 0.0525 level. A lot of reactions. Look at all those reactions there. That's contained prices. So if it can pop above there and hold or make an impulsive break, these are your next targets, 0.067 and then 0.0865. All right, that's it. Oh, by the way, positive divergence as well, bullish divergence on that one. Just as you had negative divergence here at the highs that led to that correction, we had negative divergence here that led to that correction. Personally, I don't short the very rarely. The more maybe some of the more liquid ones, but very rarely. I like to just sit back and wait for these to set up on the long side. You can really, really, really get burned on these trying to short them at the wrong time. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoy it.